Hello, this is Patrick White with your Wednesday, September 16th morning market update. Grain markets are seeing some mixed trade here overnight. This morning we've got December corn down a half a cent at 365 and a half. November soybeans are up 6.25 cents at 997 and three quarters. Corn is seeing some lightly lower trade here this morning as traders are seeing some hedge pressure enter into the market. Traders are keeping that 370 level defended in the December contract so far, but the drop down to 361 and three quarters overnight was snapped up by bulls. The new trading range seems to be between that 360 and 370 level at this time. Bulls are still hanging around as exports on corn continue to be strong, and they are going to want to see that 361 level hold here in order to keep their bullish ideas alive, and they're also going to need that export demand to continue to show up like it has. The soybean market is higher here overnight after yesterday's liquidation. Soybean meal is leading the move up at this time. We're up $3.40 a ton here on the December contract overnight. Yesterday's NOPA crush report showed a 9-month low crush of 165.055 million bushels of soybeans, down from 172 million last month and the 169 million expected by traders. Despite the drop in crush, soybean meal export demand was still stronger than last year, even though it was down to 750,000 tons. That was still 55,000 tons higher than last year at this time, so still seeing some pretty strong export demand for our soybean meal. This has sparked some buying here in the meal and soybeans here this morning, and it could show a need to ramp up the crush here this next month. All in all, corn and soybeans still have strong export demand, and that's still keeping these dips down, supported by traders. However, it's still going to be tough to rally too far here, in my opinion, in corn and soybeans with harvest coming right around the corner. It's still my opinion that downside risk should be managed for producers at this time. At least have something on either a cash sale or put option. Just manage the downside risk into fall with these higher prices. So that's all I've got for today. Have a productive day out there, and remember that there is significant risk in trading futures and options, and it is not suitable for all investors. For more information on commodity markets, give us a call at 712-262-7606.